Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
Let's move on to our investors panel, where we'll answer the question, will your strategy get funded? Moderating this panel is Dan Bernstein, Executive Vice President and Director here at Quorum Group. This is a great opportunity to listen to what investors are looking for. Dan, the floor is yours.
Hello, folks. Thank you so much for joining us for this investors panel. We're very excited to have a real great panel of luminaries to chat with today about trends in investing in software and hardware M&A. Software and hardware rather, in how it kind of guides companies from inception all the way through exit. So we'll be kind of getting into the meat of it. We've got some great questions, some topical questions about what kind of the latest trends mean for investments that they're making and how they're looking at the world differently perhaps than they were just a year or a couple years ago. So with that, I'd like to introduce Peter Ackerson, General Partner of Audere Capital, Michael Marks, Founding Managing Partner of Celesta Capital, Pratima Aiyagari, Partner of Nauta Capital, and Balduzzi, Founder and Board Member of SameGrain. So folks, let's just go ahead and start kind of go down the list and have you introduce yourself really quickly, talk about your fund, what exactly you're focused on, and what do you see kind of the biggest trend coming up in the next year as you kind of are looking at companies. So, very briefly, just a minute or so of introduction. Let's start with you, Peter.
Thank you, and great to be here. Peter Ackerson, General Partner at Audere Capital. I've been on the venture side for 8 years now, entire career in technology, including having served as the founding CFO of a now $2 billion healthcare AI company called Concert. We invest into advanced technologies, including AI, robotics, advanced communication, next-gen manufacturing, and cybersecurities. And from a trend perspective, I think we are really just on the front edge, and I'm sure you're going to hear this over and over again, of the transition from technologies that are in some ways novelties into much more robust technology applications that will be both verticalized and I think enormously transformative for existing industries and as well as for some industries that have only just begun. So think genomics and space economy for that matter, things that would not have existed 5 years ago. So I'll pause there, but great to be here.
Thank you, Peter. Michael, let's hand it over to you for an intro.
Okay. So Michael Marks, I'm a founding general partner of Celesta, as Daniel mentioned. Interestingly, in our little group, the three general partners all have backgrounds of running hardware businesses. And so like Peter, we do invest in healthcare and robotics and advanced manufacturing and so on. But we really like hardware, and we do a lot of investing in semiconductors and other kinds of hardware, which everybody has ignored in the venture business for the last 20 years until Jensen Huang at NVIDIA made hardware cool again. So we have lots of really interesting things going on in an area that people are starting to pay attention to. It'll be fun to talk about that.
Excellent. Thank you, Michael. Pratima, over to you for an intro.
Great to be here. Thanks a lot for setting this panel up, Dan, and to meet the panelists here. I'm Pratima Aiyagari, one of the partners at Nauta Capital. It's a pan-European VC fund investing at the earliest stage. So we enter usually at the seed stage and usually at the inception stage. We invest traditionally in B2B software companies. My background has been as a technologist for over 20 years now, starting initially with Cisco in the product development side of things, but transitioning in the second decade of my career to investing. Obviously, I think AI is now the flavor du jour. We are seeing AI emerge in all companies and all pitches in some shape or form. How exactly that can be beneficial, where do we see the real use cases, and the value of this optimization that comes from using AI is something that we spend a lot of time thinking about. Part of our investment thesis is really to look at companies which can efficiently get to the point of finding product market fit. So having that capital efficiency at the core of whatever the companies are doing, if it is using AI in this instance of with the new wave that's now come up. So be about really getting to that point of finding the market validation and then pouring fuel on that fire to give that company the leg up to continue to grow. That's the lens with which we look at all of the investment opportunities. So I'll pause there and pass it on back to you, Dan.
Thanks, Bart. Let's head over to Anne for an intro.
Great, thanks. Yep, my name's Ann Balduzzi. I have been both a startup CEO and an investor. I was lucky in that my first job out of college was pioneering the internet. That was with a small startup called Viewtron that AT&T put together. I also worked at AOL long before it was called AOL, when it was very much a startup. Then moved to Silicon Valley, was a product manager for Apple, developing and launching their first online service. Later moved back to the East Coast, founded a consulting firm called Accelerate Partners, where I was providing strategic advice to emerging tech companies. And then after tracking AI for several years, I, in 2012, founded my own AI startup. It was a platform. We raised millions, got some SBIR grants with the military. And that was sort of my entrepreneurial experience. And then years later, I actually joined one of my investors, TEDCO, where as managing director, I created one of their investment funds and a series of mentoring assistance programs to help the success of those investments. And that actually enabled our portfolio to achieve a 183-fold increase in follow-on capital in just the first 5 years. So pretty good success there. I left TEDCO recently, and I'm back in this AI space because that's a space that is moving very rapidly. I hold a patent in data match analysis, and I am writing and speaking on the future of AI to make sure that everybody is understanding the implications of this technology. It is going to literally redefine every industry sector. And that's it. Thanks.
Yeah. No, excellent. So I guess the big elephant reveal is AI. So we'll start with that. But one of the things that I really want to mention is that when we think about AI companies, a lot of companies are kind of jumping on the AI bandwagon. I'm not sure if you've seen the video. The fast food case that's, they spray on the sauce, then they close the lid, they spray it on the lid, then they close the bag and they spray it on their bag. It's basically, AI being used by a startup in their product, right? So a lot of times AI is used essentially as an afterthought to just say that you're within AI. So I think what we have here is some great kind of vertical use cases where AI is used specifically to further business goals. So I want you guys to kind of elaborate on that a little bit. Maybe we can start with Michael, kind of on that question.
Sure. Look, I think that's a big question. These panelists, we've all been around for a while, and so we've seen this bandwagon effect, right? Which is, whatever it is, ARR or SaaS or .com back in the day, and now it's AI. It's sort of ridiculous to see some of the things that are there, the way people present themselves. The way I look at AI is that you have tools which are getting all the attention, the open AI, the large language models, and that's like search. There's going to be a few companies that have that, and the rest is all going to go away. So the explosive part from the investing standpoint is not those tools companies in my view, and I think what I already heard from some of the other panelists will be similar, is in the application space. And we have 8 companies that use our real artificial intelligence in a specific application. I'll use one example just so people who are listening can understand. We have a company called White Rabbit, which is using artificial intelligence to read mammograms. And this, artificial intelligence isn't new. We've been developing this for almost 10 years now. We're in front of the FDA. Image reading with artificial intelligence is one of the first, broadest, best uses possible. Our technology already can read a mammogram way better than any radiologist. And that's just an example. It's a very simple, small one, but there's lots of those, from fraud detection to, various kinds of image processing and so on. So, and that is what's exploding, is what Ann said. That kind of technology is going to change every industry, but it's application specific because it takes experts in the field. So it's not overlaying a big tool. So I'll stop there, but it's very exciting.
Yeah. Yep. Great. Okay, Anne, let's go over to you to answer this point.
Yeah, so we're in the stage of AI called artificial narrow intelligence. So that's all of these narrow, very specific use cases where AI is going to benefit companies. But the companies that really have the best shot at success are the ones that I think have proprietary data. And because data is what feeds AI. And if you have proprietary data sets that nobody else has, that's certainly going to set you apart from your competition. And things are going to get really, really competitive. That's what I don't think people have quite yet realized is how competitive things are going to get and how easy it's going to be for other, young startups to really take the place and displace a lot of large companies. There's even a race to see who's going to be the first 1 or 2 person $1 billion company, because you could have a whole series of AI agents actually working with you. So as far as that goes, the other thing that I'm concerned about is these companies that are really just made up of AI wrappers, where they're just layering the AI on top. I think, Peter, you were kind of referencing this earlier, but it's really just a very thin layer, and investors see through that. It's really, it's kind of smoke and mirrors at the end of the day. So you got to be cautious about that.
Yeah. Though amazingly, so many well-funded startups have, like in the last year, have only been those layers, and I think there's a bit of a hangover now that's kind of happening in the investor community as a result of that. Pratima?
Yeah, no, absolutely. I mean, I couldn't agree more. I think just to kind of bring some numbers here, I was just reading a report which talked about the fact that in the first 4 months of this year, U.S. venture capitalists have spent $18.3 billion in AI investments. If we continue going at this pace for this year, we're looking at somewhere around 50 to 55 billion being invested in AI companies. Now, yes, I think we have to be a little bit cautious here about some of these larger companies which might have capital requirements, essentially because they need compute. But not every company that comes out the gate with some kind of, AI angle to it is going to have the same kind of capital requirements. And some of these companies which we're calling wrappers, I think we need to really understand, again, what value are you going to be able to deliver by using perhaps some of these large language models at the back and deliver that value. So one of the examples that Michael gave as well in the healthcare space, and we've seen from our perspective, a portfolio company that works in the retail tech space. So they're using, again, these computer vision models to be able to detect how quickly stock is being depleted, for example, and where do the stockists need to go, and what are the products that, for example, have been promised position of pride on the shelves, and are they in the right position or not? So all of these things which require humans to have gone and verified can now be done with these vision models. So those, I think, are quite valuable enhancements to things within very specific vertical use cases. And again, I don't think it takes away from what every entrepreneur should be thinking about when they're building these businesses is you still have to work and identify who's my ICP, where's my use case at, is it repeatable? So while we're seeing a lot of, excitement and enthusiasm, and as a venture capitalist, I think this is something that we talk about in our partnership as well. We are overly eager. We are happy. We like to see that, entrepreneurs as well see the opportunity to build something here. So we are optimists, but let's not get carried away, because I think the real problems still have to be discovered and real solution has to be built for it.
Peter, your thoughts on this as well?
Yeah, a lot of it I agree with. And I disagree that all VCs see through the wrapper bullshit. So there's plenty that don't, and hopefully that's no one on this call, or time will tell. I do feel like there's a quote that George Soros had once about how he had predicted 7 of the last 3 crashes. I think VCs as a category, myself included, have predicted 10 of the last 3 bull markets. And so it's tricky when you get excited about technologies, but I do think AI and all of its ancillaries, I think should, and I agree with Pratima's point, and I think Mike, you may have made this point as well, that healthcare is a clear use case. I think retail has very strong use cases. Oil and gas and energy, we're seeing really interesting things being done. AI represents not just the algorithm. You have to look at it through the lens of the data and the entire product stack in order to really understand who's got something and who doesn't. But just a better formula in a vacuum is going to prove unsustainable or undifferentiated. And much like prior waves, when you look at everything from the PC revolution to the Windows revolution to, the mobile social, there will be massive companies built, but it is not necessarily going to be the first, and it is not necessarily going to be the most widely recognized that captures long-term value. Right. And some of them will do it on the application side. Some of them will do it on the picks and shovels side. Some of them will do it in ways that we don't know yet because the business model hasn't been created. So think GitHub was a model that didn't exist until GitHub sort of created it at scale, and then it turned out to be highly useful. And it was like, this is the new way we're going to develop and to exchange code. So in that sense, I think all of us are going to do well, and everybody listening is going to do well if they're building or investing into this space in a shrewd way, because there's no question that this is the big wave. That doesn't mean people won't wipe out, and it doesn't mean everybody will reach the beach.
Excellent. Yeah, good use of analogies there, Peter. But I think to be frank, I think I completely agree with the sentiments on this that everyone has made here. Now, one of the things that I also want to kind of focus on is the fact that these tools providers are what I like to think of them as utilities, right? So it's the utility of AI. It's the OpenAI or the Anthropic. These are basically, you switch from, Verizon or AT&T, for example, just like it's a carrier, right? So the question is, one of the things that came up is whether or not you're actually investing in the utility space, is in the actual delivery of this AI, or you're investing in the application space, right? Are you investing in the gas company, or you're investing in the stove company, right? So that's kind of the difference there. And obviously, with conversational AI, I think the famous famous comment that Sam Altman made was that you don't want to bet against our roadmap. So how much of this is kind of that type of thing versus the things that you guys are actually investing in are actually fairly different than kind of the traditional types of AI investments, where you're looking at vision and understanding of the real world. That is truly AI outside of that kind of generative AI hype. So I think that is quite innovative. So where is that really kind of focus on the application use case versus on the actual picks and shovels utility side? So with that, maybe I'll leave it. I'll start with Michael again to answer that question.
Well, look, it's an important question. I have a simplistic view about this. And when you're investing $1 billion or $2 billion into a company, that's not venture capital as we think about it. And in these, if you're going to invest in the utilities, these are big money investments, few winners, nothing wrong with that. It's just not the business I think any of us are in. I mean, we're much smaller investors. And so as a consequence of that, the applications, we do have a couple tools companies, but in general, we're in the application space. What's good about that is that there's hundreds and hundreds of applications. So this is going to be the next 20 years as people continue to find, areas that they can apply, real intelligence to and make them better. So there's lots of those. And for us, that's a better place to be investing.
Yep. Agreed. Pratima?
Yeah, I'm happy to jump on. And I think it's similar to what we've seen probably in previous waves, but also I think the enthusiasm of companies to try out things in this new AI wave is probably the thing that sets it apart from, when you think about mobile or just the internet and cloud, you had very traditional adoption models, okay? You had the early adopters and so on and so forth. But in AI, what we have observed is everybody's now trying to figure out how can they, use some of these tools to get that productivity gain and enhancement, performance, whatever it is that, is the crucial resource that is limited for them, and enterprises included as well. So I think from that aspect, I definitely think that there are a few companies that end up being these the large novel models or what have you, but not every company that comes out the bat is going to be that. So finding those use cases within perhaps the large enterprises is going to be the differentiator. And again, I mean, completely agree with Michael, where the kind of investors or venture investors we are looking for those companies which are going to work and find those crucial use cases, be it in any one of the verticals that we've been talking about. And within generative as well, a lot of the early use cases that we've seen are more consumer facing. One, because I think we're still not very sure about the security aspects of this, right? So one is data privacy. The other is just these hallucinations we hear about. And as an enterprise, you don't want to put that kind of reputational risk on yourself. So we'll see some early use cases perhaps of, consumer-facing applications, which are a lot more forgiving. But for enterprises to start adopting, I think the bar is going to be quite a bit higher.
Yeah, totally agree. Anne, any thoughts?
Yeah, the food chain for AI is really long, and it branches off in so many different directions. And we're looking all the way back at like the energy, at the very root of it, the data center space, and it goes all the way out to that application layer. So all the different opportunities that lay in between. The caution that I have is with the way that these large language models are working more and more is the multimodal capabilities to be able to have the conversation. The user interface is so simplistic for your average person to interact with. So how do we adapt that into these more complex use cases? And then also, the hardware space, I think is a nice area where, if you're looking at doing something really unique with it in that space, not necessarily on the consumer side, because I think a lot of that's going to get wrapped up by the big players, but more on the medical device side, the healthcare space is going to be lots of disruption, I predict, in that space as a result of AI, and lots of opportunities there as well.
Yeah, it's great. Thank you, Anne. Peter, thoughts on that?
Yeah, I would agree. I mean, I think a couple of things I would say. First, sort of the orthodox lie, for lack of a better phrase, in this current moment, the lie that I think we have to say and nobody really agrees with if you inspect it is AI right now is not very good. It's radically better than it was 2 years ago. But in the grand scheme of where it's going to get to from a capabilities perspective, we're very, very early. So today's AI is going to be very different in how it evolves, and what we'll be able to do with this tool in 5 or 10 years is going to be radically different. And likewise, the way we're doing it, and you see this time and time again, is the first thing we do with any new major technology is figure out what it is we do today that we could use this technology to do better in some fashion, cheaper, more efficient, whatever, right? But that's typically not where the explosive value and the true transformation goes. So think of, for instance, steel was first used for rail, but steel really blew up as a commodity when it was discovered that if you turned it sideways, you could build 20-story buildings. And that's where steel really took off globally, was not in transporting things horizontally, but in vertically. Oil, Rockefeller started out making oil for kerosene lamps, and then the car was developed alongside of oil, and all of a sudden that's where oil exploded. So I think that right now we're in the phase of AI where we're applying it to existing processes and existing data sets. What will be interesting is when all of a sudden we pivot into, okay, we've started to understand what we can fix that's better with AI, but what can we do in sort of a blue ocean way that we just never thought of from first principles with AI? And I don't have an answer for what that's going to be, but that is an enormous canvas for people to be playing with.
Yeah. One of the things that's interesting is that you guys are investing in companies that have a different spigot than kind of traditional generative AI, right? Generative AI, and a lot of the folks that are kind of coming into the space are all about the chat interface and how to get into that chat interface. You guys have kind of views of the world and some of the kind of AI, some of the IoT cases where you're actually viewing the world in a different way. You're viewing an image, or you're viewing, a mine site, or you're viewing, something else, right? So hardware allows you to have a different spigot, right? One that is not going to be necessarily on the roadmap, but one that is, necessarily going to require an understanding of the world that now AI is going to today do a fairly good job, but tomorrow do a fantastic job at, in an effort to kind of build those skyscrapers, those new use cases. So with that, maybe Anne, you can kind of give us some thought on kind of how that has changed your investment thesis into see what the future potential would be, not necessarily how it's being applied today to kind of fix, say, we can add a chat interface to a bot that actually does the same thing that we did before, right? So, Anne, go ahead and kind of talk about some of those kind of opportunities that you may see as a result of being on the forefront of data collection and consumption that is enterprise level, that it's going to, be much more disruptive than what we've seen today.
Yeah, I think there's a lot of interesting things that are being done, for example, with the military that are going to, and this has been happening for years, where you see things that start there, they get a lot of great government grants, and then they, go evolve from that sector. So kind of seeing what those, kind of tech transfer opportunities are, coming out of those divisions and taking a look at those opportunities. But I also I'm a little concerned about what the regulatory framework is going to look like. And I think that's putting the brakes on some of the thought process as to what opportunities lie and where they lie, because we don't know what that regulatory framework is necessarily going to look like. But we do know things like cybersecurity are going to be important. And the more, all of this basically is going to need lots of security wrapped around it. Maybe quantum is going to be the next leap in that direction. But for right now, we've got to make sure that all of these new, opportunities, that as they are rising up, that they actually have some kind of robust, framework around it from a cyber perspective, because otherwise things could go off the rails really quickly for them. I don't want to go into too many specifics about some companies that I'm aware of, but there's enormous sky's the limit opportunities if the regulatory, pathway opens up for them.
Indeed. Peter, any thoughts?
And I'm not concerned about it. They nailed crypto. I'm sure they're going to nail AI too, right? I mean, the regulators they've shown amazing ability.
By saying nailing, maybe nailing to the cross, but that's...
Yeah, no, I mean, it's sort of, I'm 100% in agreement with that. It's something that's evolving as fast as AI technology and some of the other technologies in general. I think that it's hard for even investors and entrepreneurs to keep abreast of what the latest innovations are. So the regulators are going to have some spectacular Internet is made of tubes video at some point, and I look forward to being able to see it. But, it'll be interesting because right now we're building AI models, and I mean, they're very elegant, they're very sophisticated, but I often feel like we've built we're building AI models like they're F1 cars, but we live in a NASCAR world, right? They're not fit for purpose and durability, auditability, and that's going to be a challenge to be solved over time. When and how can we have reliance on these things that still hallucinate, or we don't understand whether they're hallucinating, and how do we validate all those things? But no, I don't think the regulators are going to be in any position to solve any of that. I think the military is doing some, and I agree, I've seen some of the stuff. The military is... Some of the stuff being done by the military or in partnership with, some of the corporate, it's wild. It's just absolutely wild. And I'm encouraged by that, candidly. You always hope that somewhere there's someone in a room looking at a problem that you've come across. And so every so often it turns out there is, and you're like, well, that's good to hear. But yeah, no, I don't think the regulators are going to, I know on the Hill, they've been working on an AI format. I know a number of states have formed syndicates to try and do that. But candidly, I think it's going to be a fool's errand for some time because it's too early to know what this is exactly.
Yeah. Well, I think there is a great argument to be made for actually vertical application, right? So things like that you guys are doing, investing in companies that are doing something very, very specific with relation to the hardware that's being provided, right? So it's kind of the connected IoT plus AI, right? How do you treat wastewater coming out of a mine site, right? When you actually have to have the information available to you as to how it's being used and where, how you can create a smaller footprint, for example, for that, just as a use case.
But cybercrime has been around for 20 years, and we still haven't solved it. I mean, in any practical sense, right? Spear phishing, financial fraud, and these are not particularly elegant or technologically complex things. So if we haven't proven ourselves ability to solve, those things to the Nigerian prince email level kind of problems, then I look at where we're going to get on AI, and you just even basic questions like which entity in the government would enforce that? Who would run it? Is there going to be AI FBI? It's a weird question.
Yeah, I wanted to pick up, Dan, on something you said early on about, the intersection of data or where data is being created. And I think we don't talk enough about the fact that, all of these AI models and their ability to be able to be useful really depends on how they're trained on, the data that they're trained on. Where does that come from? How proprietary is it? Is there PII data in there? Is there any kind of separation to be able to prevent some of those leakages going into the model so that when it's used for inference, you are now exposing some private information? All of those things are questions that I think big tech is thinking about, larger enterprises are thinking about, which is why I think they're more cautious to use some of these large models that are available. They are, from my conversations, more inclined to pick up open source models, bring them in-house, train them in a very siloed setting, to fully understand and appreciate how some of these interactions are going to happen. But also, I think, there are cases or use cases where having access to your own data, for example, in customer care, which could help bring some of those mean time to resolutions down, which are very easy sort of low-hanging fruit, in my opinion, where I've seen companies try to lean in. They have that information available already. Train the models on that so that your agents then can be enhanced. So you're basically adding a superpower to your human agents to be able to resolve some of these queries, for example. And then sort of moving to the regulatory topic that was being discussed, I imagine a lot of the companies, like, for example, one of the companies that I've been speaking to has been running trials with Airbus. So companies like Airbus are interested and excited to understand how they can derive value from these AI models, but regulators are far behind. They not only do not understand how they might need to regulate these models, but there's probably enough runway right now for us to have the time before some of these models make it into production. So regulators probably need to first get the human capital that can understand what needs to be regulated, and then perhaps think about it. So I think there's a little bit of mismatch on that side.
Now, guys, how long before AI is pitching startups to you guys that they've created?
I've asked, but they've been rubbish.
So far. But to your point, Peter, that we're only in early stages here, right? So, I mean, we talk about kind of the fact that kind of use case and applications and all these other things. But I think, fast forwarding 10 to 20 years, are we looking at a world where necessarily the way that these, companies get created, the ideation, the teams themselves, the process, the actual whole landscape of kind of investable companies is completely different as a result of these fairly tectonic transformations. Now, you have could I go in and just build an agency, a digital agency today? I can set up, 4 or 5 different chatbots, and they're going to create some great things. Can I duplicate Gartner today? Yes, I can. And these are just with LLMs, right? Can I do all the things that an analysis, ideation, human could do? Could I do it potentially better? And could I actually replace some of those? It actually is a significant impact on not just how we think about, what the future application of this technology is. And this is to your point, guys, you've been talking about this, right? It's actually how we redefine the world in which we live in that is actually going to be creating these applications.
Yeah, I think one of the things that's tough about AI is that it is like many technologies when they first burst on the scene, they function as a mirror that we have to evaluate ourselves in. and AI in particular. I think as you start looking at, okay, where's the efficiency? Where's the gain? What does this do? One has to begin thinking about, like, what are humans good at? What are talented? Where do we add value in the process, right? Because we tend to ascribe meaning at the individual and collective level into the things we create. And so all of a sudden, when you find something that can be creating with half of us or doesn't meet our particular skill set, that's not just a philosophical, that's an identity level question of, like, what does that mean about me or a society or whatever else? And those are tough things and to process. And that's not new, right? You look at the English word sabotage comes from the French word sabot, which is a wooden clog that people used to throw into mills to block up the gears so that they couldn't replace workers through automation, right? So, there's going to be all sorts of stuff there. But at the end of the day, I'm very bullish on humans, which I feel like is a strange thing to have to tell people. I'm excited about the technology, but I think there are still going to be vast areas of capability that we are uniquely fit for, and so I don't live fearful of that type of future. It's going to be, as it always is. Transitions we never handle them the way we would hope, but we get there, and I think the future will be similar.
So let's get off the AI train for a second, guys, and kind of talk about some of the other things that you're focused on that you think could be just as transformative in the future, right? Again, fast forwarding 10 years, maybe we live in a different world, but quantum, perhaps, right? So some of the technologies that are coming up that are going to be just as transformative 10 to 20 years from now that we're seeing happening in the AI space. Let's go over to Pratima to kind of answer that question, and we'll just go around the board here.
Yeah, absolutely. I mean, I think, look, every decade or so, we sort of try to revisit the next new trend that's going to transform the technology landscape. And, we've been talking about the Moore's Law ending for a while now. So I think quantum is definitely topical. From a venture standpoint, we've always sort of debated, for us, it's, the fund life cycle defines what we can and cannot invest in. Do we think within this life cycle, we see some valuable exits coming in that domain? And I think the short answer is probably yes. We've seen some already movement happening. But is there an interim step before that, perhaps, where, we're seeing some of these, semiconductor companies come up, which is because of the explosion of AI, but also using, optical technologies. So there's an interim step, and then perhaps, in my opinion, quantum is the next leap up. But the one that, I'm most excited about, I think, is to think about robotics and think about it as sort of a assistive technology. So working alongside humans to make, some kind of leaps forward in especially elder care. So if we've seen in the developed countries, the amount and the population increase and the number of people that are now available to support this aging population is going to be a problem. So I think robotics is where we see potentially the applications come in to be able to support this aging population. So that's a technology that we're spending quite a bit of time looking at.
Great. Thank you, Pratima. Michael, any thoughts?
Yeah, I'm not much of a philosopher, so I think we've been spending a lot of time on that. That's above my pay grade. Let me provide a much more simplistic approach to investing, which I think everybody can understand. The AI revolution is about processing huge amounts of data. And by the way, Peter, since you like these little things, you need to know, you need to have a T-shirt that says "Data is the new bacon." That'll be a good one.
That's way better than "Data is the new oil." I'm stealing that.
So let's talk about a very simple kind of investing that doesn't take a bunch of philosophy. So data, the processing of data is exploding. Everybody knows it. And that's why, NVIDIA is, gone off the map and all that kind of stuff. So what's totally obvious is that over the next 10 or 20 years, the entire hardware system in the world is going to be remade. It's pretty straightforward. High bandwidth memory, Micron was up 15% today. I mean, in order to process all this data, you need higher speed processing, you need higher speed memory. You need input output. Like we have this company Credo, which is public. We no longer invested in it, but as a really big market cap because they made an optical connector that processed information a lot faster than other ones. And so the entire system is going to be made. That's semiconductors, that's, servers, networks, it's power, it's storage, it's the data centers. And this is totally straightforward. It doesn't take the most brilliant mind to look at it and go, everything's going to need lower power. There's not going to be enough electricity in the world. We all know that. So now you've got all kinds of companies popping up to create each of these little hardware elements that use less power. It's totally obvious. It's going to happen. As investors, you still have to figure out which of these companies have the right management and which have the right, the right ideas and product market fit and all that kind of stuff. But one doesn't have to guess about whether robots are going to make robots to know that hardware is going to get redone. And so we are kind of simple guys. We're looking hard at that space and have like 8 or 10 investments in that area.
Right. Do you guys think that some of the OpenAI and those companies actually have hardware on their roadmap to be able to accelerate their capabilities? Or do you think that's an investable space because of that? No,
too specific. It's too specific. Think about NVIDIA and Qualcomm and Broadcom and Intel. I don't see how OpenAI has enough problems dealing with their own products to worry about hardware.
Right. Yeah. Again, so that it's not the actual network that you're investing in. You're actually investing in the picks and shovels associated with it, which is a great space. And like you said, that's a no-brainer, no question. And
yeah, definitely. I mean, that's all part of the AI food chain I was talking about earlier. So that's exactly right on tune. Quantum, I'm a little concerned about the intersection of AI and quantum. That's where AI and things could get pretty scary. But I'll leave that aside. Otherwise, I think biotech is a really interesting sector right now. Lots of interesting things going on in that area. Synthetic biology, which by the way is a new space that has opened up because of the protein folding problem being solved. So I mean, lots of new opportunities there, all the way down to building materials. So again, opportunities for new businesses to be created around these new inventions. AR, VR, still early stages, but I still see opportunities here and use cases that have yet to be explored with those vehicles in mind. And then, I think robotics, as Pratima mentioned, I think that is really going to open up entirely new ways, not just with the elderly, which, by the way, I hope it does some amazing things there after having been a caregiver for both my aging parents. Exoskeletons and all that kind of stuff, I think would be really interesting in that space. But what we're seeing more and more with the robotics area is these robots being able to kind of work arm in arm with other employees. And not only just, the typical, kind of warehousing environment, but doing things that are, operating machinery. This goes into the agriculture space, lots of other interesting areas for that as well.
Right. It's interesting, Michael, you got me thinking that, there's two themes, right, in investing, right? And I talk to enough VCs to know that they're interested in two things, sustainability or AI. Like if you touch any of these other things, you're kind of like not interesting. But one of the points that you're making is that, you're essentially investing in hardware components that are going to be, building this out. And sometimes that actually goes counter-cyclical, right? So how do we actually invest in companies that are actually the picks and shovels of the AI building, but at the same time, they're also, potentially driving the planet to a future that's not on fire. So, some thoughts around that. I think, companies, I've seen some great companies come out with kind of zero impact to the planet. But there's also some significant impact as the compute just grows exponentially on kind of what that means, to the rest of us. So with that, let's ask kind of the question of on the other side, right? So there's companies being built now. What are the companies that are going to be exiting in 5, 10, 15 years? Like, what are the companies that are going to be looking at, we are, coming from Quorum, right? From looking at the final step of what those kind of companies do. So what is the exit opportunities for companies that are potentially your investments today, right? Where do you think they're going to be, and what's the future for them? So Peter, you're shaking your head, so let's go ahead and start with you.
I'll go with 3 categories of companies. So they're going to be, they're clearly going to be early application startups that prove a niche. I think healthcare is one where they get access to proprietary data and they can execute against it. And everybody's comfortable and goes, yeah, this is a better way to, for instance, as Michael said, this is a better way to read mammograms or certain types of scans. It's just better, and we understand the economics around it, and we can punch it out, and everybody will use it. So I think those businesses will be pretty straightforward IPOs. They'll have solid math behind them, and you can get them out the door. The second, which I think will show up and is in the process of showing up, will be the early DevOps, dev tools for this space. When people consolidate around what is the various pieces of the infrastructure need to look like in order to effectively layer this into enterprise and have visibility over provisioning, managing identity, executing code and things like that. And then the third is, I do think there are going to be specific hardware components that are really compelling. And we've seen a couple of them. I will say, and I mentioned at the top of the discussion, I think there's going to be some space IPOs and not just, SpaceX or something else. There's a lot of stuff happening up there behind the scenes. And a lot of it is already massively revenue producing, whether it's images or analytics or things of that nature. And I would say the same thing for the traditional infrastructure. Once people come around to, again, hat tip to Michael, once people come around to, okay, we have to rebuild all of this infrastructure and this is what it's going to take and this is who people are going to use, that company is going to go from start up and prove it can scale and everybody will understand the economics, and they'll need to access large pockets of capital in order to fully execute on that vision. And sure, some of that will be credit, but a lot of it will also be early stage equity to prove it out. But those things are going to have to, we're going to have to repave every highway in the digital space.
Yeah. Pratima, any thoughts on that? On the exit?
Yeah, I think Peter's covered all of the big ones. The only one that comes to mind, which I think is worth mentioning, is cybersecurity. We have obviously large players in the cybersecurity space, but when we think about sort of venture investing, there's always the idea that these end up becoming trade sale opportunities for some of these large vendors. So if you're looking at a certain vertical, a certain specific area, for example, AI security, one of the large platform vendors potentially may not be able to be the fast mover here. And hence, I think we're seeing a lot of funding going in at the moment at the very, very earliest stage in some of these AI security companies. Now, it's going to develop over the next decade or so to see if they reach the scale and ability to be consumed by some of these large platform players. So I think, cyber is one that I'd keep my eyes on.
Anne, any thoughts?
Yeah, I'm concerned about software companies that are creating solutions that are literally around the corner from, one of these large language models simply being able to do. And I've seen that already happen to a group of companies that had what they thought were unique solutions that overnight, they became irrelevant. So if anybody is sort of in that space and they're that ability to be irrelevant is, on the horizon, look for exit opportunities because you want to kind of, there's almost no way to get around it. And so there,
Aren't you constantly looking for exit opportunities then?
Yeah, exactly. But that's the thing is you've got to kind of always be sort of, looking around the corner to know what that latest, greatest technology is that's going to make your business irrelevant. So it's going to be tough for the next few years for sure.
Now, that's good point. And yeah, I've got a great set of companies that are just building the greatest chatbot that's going to revolutionize everything, right? So I look forward to sending those and getting your thoughts on that. Just kidding. Michael, any thoughts?
Yeah, I think one of the things that, there's been a real dearth of IPOs in the space and the venture investors for a while. I think that's that's shifting now because you can't turn on the television and not see how the top 7 companies are 35% or 45% of the gains in the S&P and all that kind of stuff. There's going to be a lot more interest in these kinds of companies, especially on the hardware side, which is totally obvious because here's NVIDIA $3 trillion and Broadcom at $800 billion and all these things, and so there's going to be much more interest in the IPO market, not only in hardware but also in these application-specific areas because people are realizing, and that includes the healthcare space, but technology as applied to healthcare, which I think is a big deal coming. There's going to be a lot more interest in the IPO in the public markets. One thing. The big players just keep buying everybody up. And so when I'm starting to get excited about actually trying a different path and just go public like many of us have in the past. So big opportunity in the future.
Yeah, completely agree. Well, I think that brings us to the end of the panel here. I would like to thank Peter, Michael, Pratima, and for a fantastic panel. Great discussion, sometimes philosophical, sometimes practical. Michael, thanks for bringing us down to earth. Because we all like to, go into far into the future. But it's important to do both. And I really thank everybody on this panel here today. A really fantastic discussion. And thanks for the insights. And Ivan, over to you for the continuation.
To our audience, we appreciate your participation today. Visit wfs.com for more information on events coming up. If you'd like to get in touch with the WFS team, speakers, or the Quorum Group, email us at info@wfs.com.
World Financial Symposiums, the education center for tech leaders.